Buenos dias. Hey, good morning. It's Michael from Back to the Future Trading, and woke up super early. Not really. It's 8:30 Eastern Time here on this Tuesday, and I saw a beautiful chart. Beautiful in the sense of three things. Number one, the bottom of this chart represents a behavioral footprint of the banks and institutions out into the future. That is to say, everywhere you see a histogram in the future, one of these bumps, one of these mountains or valleys, it represents a high probability time in the future that the market will move in a direction at a time that it almost always has lately. Now, most people don't believe that, mainly because you're not looking for it. It's one of those things that is hiding in plain sight, and years into your future trading career, you look back and say, oh yeah, it was always there. So that's probably the first amazing part about this chart. The idea that you can know when to trade. Knowing when to trade reduces the chances of overtrading. It helps you keep your stops tighter because you know how long a trade has to go. Along those same lines, it helps you let your targets get hit because you know how long a trade has to go. And the second cool thing about this is framing it in the context of a filter. And one of the easiest filters that I've found over the last 9-10 years is the idea of using a trend in some way, shape, or form to help define the entries that you'll take. And so I've been fairly consistent over the last decade in using a 120 period EMA. Now that's an exponential moving average. And if you're not sure what that is in reference to a regular simple moving average, you can look it up and see in your research that an EMA places more weight on the most recent bars. So it's less likely to lag when the market moves in one direction or another. It moves a little bit quicker than an SMA, but I digress. The third part of this that I love is the application of a trading system that I teach the students in my class. And I try to invoke principles that I know customers who are consistently making money are tending to use. So let's start over here and help you understand how I see charts when I look at them, especially this morning, and why this chart makes me happy. When you see the signal at 5:45, you'll notice that the candle is already above the moving average. And so we have a disparity. There's a conflict. We have a selling pressure signal. However, the signal is above the moving average. So we have a positive trend with a negative selling pressure above it. But this very next candle at 5:47 Eastern shows a close below with time left until the next buying pressure signal. And so the way my trading plan works, the way the Caveman strategy works, is I use a 5-tick risk minimum when I see a crossover like this, or my stop just above the crossover candle. So in this instance, with a 5-tick stop, we'd be looking for a 10-tick target, or a drop from 33 to 23. I'll show you where that ended up being. 23 is where it finally passes through, right there. So the first setup on the chart shows a 10-tick drop. Okay. Now the next signal is what I call a pattern 4 in my weekly webinars. A pattern 4 is a selling pressure signal with a new lower low on either the candle of the signal to the left, or the candle to the left rather, or the candle to the right, 1, 2, or 3. And in both of these instances, the software discovered that candles 1 and 2 qualified as lower lows in relation to the prior structure. And so when I see that, I'm waiting for a pullback to the actual dot. And this market trended so strongly this morning that it never pulled back to the entry price of 50.29. The following signal at 5:59 was a counter trend signal, so it's not as high of a probability entry as its selling pressure counterparts, and so I ignore it. The following signal at 6:09 is a repetition of the pattern at 5:55, and you'll see that candles number 2 and 3 are lower low selling pressure signals, or pattern 4s in the guide to the histogram. We're therefore using Caveman strategy rules. This is the name of the system I gave it. So simple, even a caveman could understand it. According to that rule set, I need to wait for the market to pull back to the dot before I do anything with it. And so again, this one doesn't qualify. So far we've had 3 signals and only one of the 3 is qualified. The following signal at 6:15 is a counter trend signal. We expect the market to consolidate and move sideways with a small move up at 6:15 because the trend is down, just like the histogram guidebook tells us. And now we continue to move forward, knowing that the next time in the future, 6:35, is going to be a selling pressure signal. So we invoke the same rules that the Caveman trading system, a link I'll put in the description of this video for those of you following, dictate. And so in this case, you'll see that the candle closes at 50:17. This is the time we're expecting a down move. The distance from the close of the candle to the dot is 4 ticks. The Caveman system requires we use at least a 5-tick stop in CL, which would put us at 50:22. So with a 5-tick stop, we now know we're going to look for a 10-tick target. And I've built out a neat little fib tool that helps me see where that is. So at 150% of my risk, I'm going to move my stop to break even. That's a way of locking in profits so I don't let a winner turn into a loser. But at 200% of my risk, I'm going to exit the trade. And so just like we did earlier in the morning, I'm going to put my ruler tool here and just show you where 10 ticks gets crossed over. And it happens right there. So there's the second setup. And the beauty of the way the Flux timing system works is it allows you to, again, you know how much time the trade has to work, you know when to be looking for these trades, and they're higher probability, meaning we're expecting the market to do something very specific at a specific time. And so that's what I love most about it. The next signal we know at the close of our trade here at 7:03 won't be here for another 10 minutes. And so there's nothing to do. We can get up, we can walk around, we can go into the next room, we can pet the dog, we can walk the dog, we can play frisbee with the dog. There's lots of things to do if you have a dog. The next trade comes up at 7:13 and it's a pattern 4. You'll see it's a lower low red dot, and you know the rules from the Caveman strategy dictate I need a pullback to the dot before I do anything. And it didn't cross the dot at 50:05. Instead, it just kind of meandered around 50:02. We get to 7:32. It is a buying pressure signal. It's not something I'm interested in a downtrend. Once that 7:32 signal passes, I have 11 minutes to clear my head, walk away from the PC, eat an Eggo waffle, watch a couple minutes of financial news on TV, maybe catch up on Game of Thrones. There's all sorts of things you can do. The next signal we know is coming at 7:43, and at the close of the candle on 7:43, this dot appears. Ding! So what's so great about this dot? Well, it's a third iteration of our Caveman entry. So in this case, you'll see the close of the candle is at 49.97. The dot itself is at 50. That's 3 ticks away. Our minimum risk is what? That's right, 5 ticks. And so our stop is going to be 2 ticks above the line. So from 97 to 02. And when I draw this fib, you'll see where my target ends up being. It ends up being at 49.87. So we're trading in the direction of the trend. We're waiting for times that line up in the direction of the trend. We have a specific rule set for when we see that time. And we have a break-even strategy as well. when the market goes at least 150% of our risk, we move our stop to break even plus 1 tick. And so here we have our third winner of the morning. When that candle closes, we know the next selling pressure signal is at 754. Now, here's where things get interesting. At 754, we have a lower low red dot. This is pattern 4 from our guide to the histograms. We've talked about this a couple of times so far, right? So the rule for the pattern 4 pullback setup goes the following way. Ordinarily, our stop, if this wasn't a pattern 4, would be from the close of the candle, 1 tick above the dot. So that would put us at 91. So 91 to 86 is 5 ticks. So it happens to be our minimum risk, as well as being 1 tick above the dot. However, this is a pattern 4 signal. And when we have a pattern 4 signal, we tell the trading plan tells us that a pullback is required. However, once we pull back to the dot, we still need to know where to put our stop. So I'm going to take our original risk and I'm going to put it above us. So with a pattern 4 pullback, or one of these green arrow red dots, the setup now looks like this, where the entry is the first red line and the stop is the second one. You see how important understanding that pattern is? That pullback nature of that signal dictates a different kind of rule. So once we know the risk, we know what? The reward. Because our trading plan says we have a 2-to-1 threshold. And so we're passing through that entry price of $49.90 at 8:01. Once it passes through, we know our stop is 5 ticks above us. We know our what? Risk is 5 ticks, and our target then is what? 10 ticks. So over here, we're going to note where our entry was, and now we're moving down, moving down, moving down. We would touch our break-even entry here, break-even movement rather, which would have moved our stop 1 tick beyond our entry. Okay, it never pulls back to the entry and comes down, it comes down, it comes down, all the way to our target of 10 ticks. So a pattern 4 or a pattern 5 entry requires a pullback because of the dual nature of the time signal. And you can read more about that in the guide to the histograms. All right, now, once we have that, I'm going to just move this over a little bit so we can kill that fib. The very next signal is a counter-trend signal at 8:17, and we don't touch it. So the trend is wildly down, meaning when this candle closes at 8:13, we know there's nothing to do until 8:24. There's 10 minutes. So do you stare at the screen? Do you force a trade? Do you swear at your monitor? Or do you get up, clear your brain, listen to a song on the radio that you like? You can do any one of those things. Now, the cold hard facts are that when we got to 8:24, you can clearly see that if our stop was 1 tick above the dot, that what? We'd have been stopped out. And so our risk on the trade was from the close of the candle to 1 tick above the dot, which would have been 82. Okay, and that was a 5 tick loser. Now, you're not a loser. In fact, if you've ever read the book Mark Douglas wrote called Trading in the Zone, he actually says that the very best thing you can do is perfectly execute a trade. That's what he equivocates pleasure with. If you are moving forward in your career as a trader, it necessitates an understanding that perfect execution leads to profits over time. And so this morning, following a timing signal that you knew was coming up, following a behavioral pattern that the banks have left behind, there have been a total of 1, 2, 3, 4, 5 setups. And so plus 10, plus 10, plus 10, plus 10, minus 5 on a hard trending day, you will know which areas are worthy of your consideration for entry. You will know how long those setups have to last. And by knowing what to expect, what patterns to expect at key times, you can plan your morning out. You can know, in theory, exactly how many setups you have the potential to trade, and exactly how many setups will not be worth your time, or are worth perhaps looking past and waiting for a higher probability time to occur. Now, this works on higher time frames. We can perform this analysis on a 1-hour chart or a 15-minute chart. We can perform it on a daily chart. But this morning I'm focused on CL because, truth be told, I have a relatively small attention span, and I don't like for the markets to take too long to get to my target. Crude satisfies that portion of my personality type, and I really like it. So if the market is trending, you can know, even if it's not trending. My style of trading, though, lends market environment like this to me very simply to look for entries. And so knowing those times in advance, knowing to the right when to be ready for those signals for the rest of the morning, it's just a question now of execution. Sitting here and waiting for the setup to occur, and if it doesn't, clearing my mind, walking away from the computer, living my life, doing the things that I'm trying to trade to do. And when the time comes, we go to work. If you have any questions about this entry system, or you're more curious about the Caveman strategy entries and how I teach them, please look in the description below this video. Remember, the market you trade is not random. Everyone here at Back to the Future Trading, be prosperous, and we hope you have the freedom that you're searching for in your trading career. Take care, everyone.